All right, what is going on, everybody, and welcome to our little live stream. Today, we're going to be chatting with a couple of people. You guys may know Saul and AJ, my friends from the Buy Box. We've got some new folks with us, Samir and Devin from HighBeam. And we're gonna be talking about something that is not necessarily the most sexy or the most fun or what people want to deal with on a regular basis. We're gonna be talking about banking. However, the reason I think that this is important is because I have looked over all of the options out there. I know where I've done banking in the past, and HighBeam is coming at things from a different angle, which I always like. I like to see a little bit of disruption, especially when it's in favor of those of us who are in the e-commerce space and the Amazon space. And so I think that what you guys have done is pretty cool, and so I'm excited to be able to talk about it, learn more about it, and of course share it with some people. And guys, for those of you who are watching, please make sure to ask questions. I see you guys popping in there. Great to see Kevin and Gabriel and Nico. I'm glad you guys are hanging out with us. If you guys have questions as we kind of go through this, feel free to drop them, and I'll make sure to ask the tough questions. Yeah, absolutely, Kip. Thanks for hanging around, man. So, Samir, Devin, thanks for hanging out with us tonight. I appreciate you guys. I kind of want to start off, like, where did this idea come from? That, number one, you wanted to kind of break into this, this old stuffy vertical of the banking industry, and what made you want to help out the e-commerce / Amazon seller? Because I don't know. You look at the Chases and the other banks that have come around, and you just don't see that sort of. You don't see them tailoring it to people like us.
No, it's great to be here, Chris, and thanks for giving us the time and the audience. I think it's interesting what you started there, which is I think completely true, is that there's been almost zero innovation in banking in the last 50 years, right? If you go back 50 years, how we sell has changed so much. How you bank is actually identical, except maybe they used to go to a teller, and now you have the exact same thing online. And part of why we started the business was I dealt before HighBeam with a large number of e-commerce sellers and brands, and we found it was really interesting that it's actually really tough from a cash flow standpoint to effectively manage a selling business because it's cash flow intensive. Like you got to buy. You got to buy ahead of time, and then you sell it, and you got to manage your cash flow effectively. And what's interesting is there's really two flows in the business. There's a flow of products. You buy products, you sell products, and then there's a flow of money. And most people don't worry so much about the flow of money beyond like, oh, I have my card or I have my bank account. But what's happened recently is, especially as interest rates have risen to historical highs in the last year, how you manage your flow of money is actually as important to your business success as anything else. And so what we're trying to do with HighBeam is really help all of these independent sellers and e-commerce brands who try to build these businesses say, you probably have a really good handle on your product cycle and the things that you sell and you put a lot of time and energy in. How can we help also with the money cycle and help you make sure that you understand where the leakage is and how you maximize that? Because at the end of the day, that's what matters in some ways. Like, how much money do you get out of the business? And we felt that it was a real opportunity to help with that.
Awesome. It is funny. You mentioned that there's not been very much innovation in banking in the last 50 years, and you're right. I'm kind of feeling that myself today. I had to send a wire transfer today, and I get online to do it, and they're like, it's for a down payment on a house, so it's a big chunk of money, and they're like, oh, you can't send that much. You need to come in to the bank. And then they charge me $10 extra to come talk to a teller rather than do it online. And then I've got a guy who works for me in Australia, and he makes fun of me because we don't have instant Swift transfer bank to bank. He's got to wait 24, 48 hours for my wire to him. So it is. I'm glad to see things shake up a little bit.
And it's so interesting, and it's probably a little bit off topic because the US has two primary money movement rails, ACH and wires, right? And those were like in the 70s when had dot matrix printers and the internet ran on modems that made the dial-up sound in the 80s and 90s. But what's interesting is most banks took their compliance processes and what they had built in the 70s, 80s, 90s and used those exact same processes and just pushed them online. So
Mm-hmm.
if they said that you have to manually verify and be in person for a certain wire volume, they're not going to update that because they're just, that's the way it is. And so it's so interesting that they've just kind of like used that same model. And so there is hopefully, well, our bet is there's room for improvement, and that's what we're trying to bring.
Yeah, absolutely. So let's start diving into some of the features and maybe even the tech stack that you guys have that would be good for the Amazon seller. Yeah, I know that we talked about in the past. We've talked about like the insights and analytics that you guys offer. Can we break some of those down a little bit and how they can help the seller kind of manage their cash a little bit better?
Yeah, of course. And at some point in the chat, it's useful to share my screen and actually talk to the product. We can do that further on, but just give you kind of overview. I think the way we view it is at the end of the day, the role of the bank is to make the flow of money through your business as efficient as possible. So give you visibility of where the money's coming in, where is it going, how's it moving through, and then make sure that along the way, you're spending the least amount possible as transparently as possible, and that when you need it, you have access to capital or yield to maximize the flow of money. So what I
Mm-hmm.
mean by that is there's three major components to that. One is when you have cash, are you maximizing the yield that you get? So we built products around high yield and operating yield and automation between that to say, even if I have an extra $10,000 for 2 weeks, let's make sure that I make money while I have it.
Mm-hmm.
Second is let's make sure that if I need access to capital, I can get there in a fair, transparent way instantly. Like for most of our businesses, it's really hard to forecast how much cash you're going to have in a week or how much cash you might need in a week. You might have a deal that pops up you need to run on right away. So it's like, how do we make sure that access to capital is available? And then the last is kind of the insights piece you mentioned, which is how can we give you a view that's as close to real time as possible on where did my money come in, where did it go out, how much cash do I have, and how much cash am I likely to need.
Mm-hmm.
That's kind of the basic three things. And what we find is like most people are trying to put that together from like 6 different sources. Like you might have a card with someone, you might have a line of credit with someone else, you might have a homegrown spreadsheet you're trying to keep it all together in. How can we bring that together and make it a super simple design specifically for online sellers?
Nice. And I want to step back to that yield portion a little bit because I think that the people who are doing this as a side hustle, or even the people who are full time Amazon sellers, for example, uh, I think a lot of times we think, oh well, I'm not big enough to take advantage of something like that. That's what the big boys do. That's what SaaS businesses and tech businesses do, or maybe they just don't even know about it at all. But we know, like, say Amazon, for example, they get to hold our money for 2 weeks before they pay it out to us. We know that it's not just sitting in some 0.1% interest rate checking account. They're putting it into some high yield account or whatever they've got set up with their bank. And you guys are bringing that to the everyman, essentially. You can take your money, you can put it over into a high yield account, you can get paid 4% on that cash, which it may not feel like a lot, but at the end of the year, because we turn so much money over, it can be a significant amount of money, at least something not to turn your nose up at. So can you kind of walk us through the process of what that looks like, and maybe even if you have any numbers that you've seen from some like maybe medium-sized sellers?
Yeah, it's a great point. And one interesting kind of snippet on that is, especially if interest rates have risen, you'll
Mm-hmm.
see like a lot of companies when they announce their profits, they're like, "Oh, we're so much more profitable." And part of the reason is because they're holding on to float from. My favorite example is payroll. So a lot of people have like you use JustWorks, or if you have people on staff or whatever that you're using, the payroll company pulls the money out like 5 days in advance of paying someone else, and a huge chunk of their recent profits are just because they hold that float and invest it for that period, and you get 0%. So part of what we're trying to do is bring the tools that all the big businesses have to everyone. And what that means for us is you don't need a finance team to help you manage cash every day. what we'll do is say, we'll set up two accounts for you, a primary operating account where you can earn some yield, but a high yield account with, say, 4% or up to 4.5% yield, and automatically move money between the two. So if you have any excess cash, it makes money even if it's for a week. So it might not seem like a lot, but with interest rates at this 4%, 5% number, say you have, over the course of a year, say you have a total of like $1 million flowing through you, or maybe $2 million flowing through you. So you're doing about 100, 200K in sales a month. We can get about 1% of that, depending on the flow of money, as a return to you. So that might not sound like a lot, but that's $10,000 just even if you're maintaining almost a zero cash balance business. Now, if you have actual excess savings, say you even had 300,000, 200,000, whatever it is at given time, math on that 4% of that still starts adding up. So now we're starting to see the tens of thousands at that level. And this is something recent. This was not true a year ago or 2 years ago when interest rates were at 0%. So what's happened is interest rates have moved up the fastest in our history. And they've gone from basically 0 to 5.5%, the Fed fund rate. And what most banks have done is they're greedy. They're just keeping that spread for themselves. And what we're trying to do is like give you a fair cut at it. And I think the 5% interest rate environment is here for the next couple of years. Like, I don't think we're in a situation where this is going to go away anytime soon. So that's really what we're trying to do, is bring that yield as much as it is. And at these interest rate levels, the juice is worth the squeeze, probably for anyone that does, in our estimation, almost for anyone, but like anyone that does more than $500,000, let's just say, a year in sales, like total throughput, it's probably worth switching it on to get that incremental 5, 6,000, 10,000, whatever it is.
Yeah, absolutely. I mean, that's a couple months of warehouse rent, or it's all kinds of things. Any way to pad those margins a little bit is kind of nice. And you don't have to have it stuck in T-bills for 6 months or anything like that. So,
and the thing there is, it's interesting because we've tried to tweak our products to be very specific for sellers. And there people would say like, oh, you have a money market account or a T-bill account at like 5%. And so why should we use your 4% high yield? The reason is, for most sellers, what matters also is the instant liquidity. So the fact that there's no time wasted in moving money back and forth, and it's always available. Whereas a treasury account might take 2 days to move back and forth. One, you're losing the float during those 2 days. Two, it's too hard to forecast then to figure out, what if I need the money tomorrow? So what people end up doing is they never end up moving money. So we see this all the time, where on the previous bank, they may have a high yield account, but they never move money from the operating to the high yield because it just takes too much time. I can't forecast. It's a pain. The automation of that is actually what makes it worthwhile, so that you can actually get the value. And that's something that, we see as kind of hopefully a core feature.
Yeah, absolutely. I know when you guys told me about that, that's when my eyes lit up. I thought that was awesome. I want to talk about the other thing I really want to talk about is, and I know this isn't for everybody, but you guys have things like revenue-based lines of credit, and I think we talked, and you can correct me if I'm wrong, but we talked about like not waiting for Amazon payouts and things like that. Can you expand on that a little bit, how it works and who it's good for?
Yeah, no, of course. So one reason we started the business was because we thought there was a lot of predatory capital providers in the space. Amazon is actually not too bad in terms of their own lending options. They're actually one of the better ones in the space, but there's a lot of kind of like people that make it hard to realize what the true cost of capital is for the loan that you're taking. And the reason behind that is, for most sellers, you actually don't know the duration for which you need to have the cash or loan for. You don't know. Like, I might be cash rich right now. Maybe I need it for 2 weeks. Maybe I need it for a month. Maybe I need it for 3 months. Like, I don't know. So if you take a fixed kind of like duration product that's going to pay out over 3 months or 6 months, regardless of the rate, the chances that that lines up exactly with your needs are very low. Like, so the right product really for most sellers, if you qualify for it, is a revolving line of credit. What I mean by that is, you don't have the obligation to pay if you don't use it, but you only use it and pay for the amount and time that you use it for. So if today I want to pull down 10K and 5 days from now I pay back the 10K, I only pay interest for those 5 days at a flat, fair rate. The problem is lines of credit historically have not been available until you're like multi-millions, asset rich, lots of hoops, takes 2 months to qualify for. So what we're trying to do is bring that same line of credit product that's accessible to larger businesses as small as possible. So our challenge is like we can't go super small because of our underwriting, but anyone with more than about $500,000 of sales a year, so let's just say at the $50,000, $60,000 a month mark, we should be able to underwrite at that level for a line of credit. And the benefit of the line of credit is it's connected to the bank account. So instantly accessible for when you need to make that payment. And then the moment you get the extra cash and can pay it down, it stops the clock. And so that was the core. And so if you're waiting on your payout from Amazon, we'll be able to pull down the money if you need it. If you don't need it, don't pull it down. There's no obligation to, don't get the fee. And again, then you pay it back. So these things again add up over time. And so that's the product that we've built in. We hope over time to be able to offer that product to smaller sellers as well. But for now, it's a certain size and threshold and above that we can offer it.
Yeah, that makes sense. And I don't know. So I'm going to be sharing kind of why I like this, because I know a lot of people, they can be skeptical of banks and things like that, but one of the things I'm especially skeptical of in the Amazon space is there are a fair number of factoring companies, and on the face of it, those look like good deals, but once you actually dig into the numbers, it's almost usury, in my opinion.
It is, and sorry to interrupt you, Chris. It's one of my pet peeves. It's one of my pet peeves. There's in various ecosystems, there's these like sharks that should be illegal, and the only way to get around this is, and I'll put like Shopify Capital and the Shopify ecosystem in there sometimes. Like Clearco is in there. They masquerade under this guise of, oh, it's a fixed fee, it's simple, it's instant. Factors are notorious for this. Anytime in my mind you take any sort of credit, if you can, you should ask yourself and figure out what is the true APR of this product. And factors will not tell you, even though, which really annoys me, they have to calculate an APR to tell their investors, but they won't tell you. The same with all these cash advance guys. They have an APR. If you're an investor in that company, they will tell you the return that they expect to make, which is what the APR essentially is, but they'll never tell you what it is. And so we, from the start, we're like, we have a flat, transparent APR on all our products. We encourage you and we help you when you have offers, and we're happy to help with this. We actually built tools. We built a tool called whatstheapr.com for people to enter in their offers to get the APR. It's one of my pet peeves because it's just predatory and it should be illegal. Like some of the rates we've seen are like 45%. Like that should be illegal. And the way to get around it is because they lobbied to have it called cash advances and not loans, even though they are, so that they get around the usury laws. So I love that you brought that up because it's exactly one of my pet peeves as well.
Yeah, absolutely. I've seen too many people, go in and use them, not understanding, and then down the road they're like, "Holy cow! I actually paid this much money." And I was like, it's hard to figure out. It's almost impossible as a user. So let's move on to one of the other things that, especially Amazon sellers, we're moving through a lot of capital on a fairly regular basis, and so of course one of the things is we like to pad our pockets with cashback. Do you guys have any ways to make cashback with your guys' products?
We do, and we have two products really. So and while we're on the topic, I think it goes back to our point around as the money moves through your business, how does it move through your business? It moves by ACHs, wires, cards, right? And then it comes back through payouts through Amazon. It's typically how it goes. So for us, ACH is free always, wires are free. So minimize the money movement out. And if you use our cards, you get on debit cards 2% back on all retail purchases, and on credit cards 1.5% back on all retail purchases. The in order to use a credit card, you do have to qualify for the line of credit, because what we talked about before, that connects to the same line of credit. So if you do qualify, typically it's a higher limit. And the way it works is it's essentially interest-free till the statement close. And so that's what our product is. Of course, you can still maintain your existing credit cards if you want. We don't mandate that you have to use it, but that's the product that we currently have.
Perfect. And I guess anything I'm missing? I'm sure there's a lot of other features or tools you guys have that I haven't learned about yet.
No, I think what's most exciting for us is we're learning what works for Amazon sellers and others, and we're really committed to trying to build tooling to help drive visibility. So one example is, for a lot of sellers, we've enabled real-time cash flow statements. So we go back to the insights piece. It's like, it's hard to know sometimes where your money's coming in and where it's going and how much I have and where is it sitting. So you can connect your Amazon account and the data to HighBeam, and then we'll use that to read and say how much is coming from Amazon. And then we'll see how much you've spent on your suppliers or other sources and categorize it and give you a pretty simple cash flow based view that can be in the app, or you can export to your own Google Sheet. But what it saves you from doing is having your own homegrown spreadsheet that you have to keep up to date all the time. It just updates that automatically. And that's something simple, but it's like we're learning what would be most valuable, but that's the sort of stuff that we're kind of committed to keeping to build. And I think that's part of what we're trying to do is, like, your bank is not going to innovate and build new things specifically for you in the next God knows when. We're trying to make sure that we differentiate ourselves by just building stuff like that. And that's really where our focus is.
Do you happen to have an example of what kind of that dashboard that you can show off?
Yeah. If there's time, I can share my screen and actually walk through, or is that?
No, I got all the time in the world. If you've got time, we can do it.
Amazing. Let me see if I can figure this out. Share screen.
While Samir's doing that, I'm happy to actually talk about 3 other features that are, they're not as big, but they were like near and dear to me. And that was the ability to easily create and manage multiple accounts within your one dashboard. Because I had legacy for a long time. I wanted a separate tax account. I wanted a separate account for cashback. I wanted separate things. Super pain, super hassle. And then like transferring money between those accounts wasn't instant. Whereas HighBeam, you can create multiple accounts. You can create multiple virtual credit cards and virtual debit cards. So if you have a sourcer that does your sourcing for you, or different things like that, you can easily create multiple cards defined by whatever you're going to use them for. And then I think we're going to get to this in a second, but it's like speed of money. I've taken Amazon loans, I've taken other loans, I've taken Shopify loans, I've taken PayPal loans. The problem with a lot of these loans is the time you click accept, the time you get the money. And you lose out an opportunity in that space. And because HighBeam is your bank, if you get approved line of credit, and Samir's I'm sure going to show it here in a little bit, as soon as you click, give me that money, it's yours. And it's yours in cash, and you can do what you want with it immediately. So like that speed of transfer makes deals for me possible that some of these other banks can't do.
I know you're telling me that story. It made a deal possible, not just recently for you, a nice big one, right?
Yeah, I mean, speed of money is huge. So last week ago now, last Friday, we offered opportunity for about 150,000 wholesale deal, but they needed to cash. It was like, we can't do 30-day terms. We need cash. We need it wired by Monday. And so I didn't have 150K on hand, and I had a couple of friends, and we kind of all went in on it together. But the reality is, like any of these other loans that I would have taken, by the time I said, yes, I want that loan on Friday, I wouldn't have had that money Monday to then pay off the wholesaler. So we're HighBeam. I click Friday and have the money Friday. And so I would have missed out on thousands of dollars worth of profit for really no good reason other than a bank taking their time.
That's awesome.
Yeah. And so let me just give you a quick tour, whirlwind tour, and then if people have questions, they can reach out to us, and we can always happy to walk them through in person as well. But like, this is kind of what you'd expect when you log into HighBeam. We're a banking platform. As Saul mentioned, one, you can create multiple bank accounts for various purposes. I think we talked about the high yield account, which is like, and this is, by the way, a fake account. This is not my personal account or anything. This is a fake staging account. So this is where you create your multiple accounts. Part of this is very clearly saying in the high yield how much APR you make, how much interest you made this year, why that is. All of that stuff is kind of very upfront. The parts that I wanted to talk through, and the send money is very simple with all the ACH and wires. And we actually also offer, for those that are transferring money internationally, we have like best in class exchange rates, similar transfer wise, because for a lot of international people that have international suppliers or international team members, that's kind of a cool use case. But the two things I want to call out were the line of credit that's built in here that makes it super clear how much you have available. So this is an example for someone that has a $200,000 line of credit in the bank. So you have $127,000 available today, and you owe 72 as an example. You make it very clear how much interest you owe today for that amount. If you pay us back tomorrow, that goes to zero. So every day you only owe for what you owe that day, which I think is a kind of a novel thing for a lot of sellers in terms of how they think about credit. But we're very upfront with that. And that is kind of like the core of why the revolver makes sense. Like you pull it down, you pay it for as long as you want, you pay just the interest for those days, and then it stops. And in terms of how you draw it down, you can just go draw down, and it's an instant drawdown to the bank to your primary account. You put in the amount, you go next, it's there. There's no approvals, there's no jumping through hoops, it's instantly available. So, and the same way if you want to pay it back. If you go to your accounts and you pay it back, it acts just like another bank account. The other couple of things I'll highlight, you already have an existing bank account. You can connect that here to make the transfers easy. It all shows up in one place. You connect your Amazon store or Shopify if you use it. You can see all the balance there in one place. It gives you a view of all of your cash in one place. And then, Chris, you were mentioning the insights piece. Just a couple of examples there. So one example is on the spend, what we'll do is we'll go and categorize all of your transactions, whether through HighBeam or whatever other source, and say, here's how much you spent month over month by what vendor. And so what retail partner, whatever it might be, you're starting to see in one place, hey, where's all my cash going? Mm-hmm. That's kind of a cool feature that we've rolled out. And then the last thing I'll highlight is, and I apologize, this will be on a spreadsheet, which sometimes I'm always not happy to, necessarily show, but actually, can you see the spreadsheet or no? Because I think it's on.
No,
not yet.
One tab currently.
I think because a tab, let me just restart the tab. And I think it'll pop up.
Chris's dog's very excited about this.
Sorry, the lawnmowers showed up at the wrong time, and when the lawnmowers show up, my dog, it's time for war.
That is, it's funny. My dog is like the delivery person. When the delivery person knocks on the door, it's like Armageddon. But what this was trying to say was that same data that's in HighBeam, we can export it so that in real time, all you go is HighBeam sync data. And this goes and updates your cash view to say, hey, every month, how much money came in and where did it go out? And we're still building this out to make it more useful and what features we're adding on. But this is an example of how, if you have your homegrown spreadsheet and you're trying to forecast what's my cash needs, how much does money come in and out, it's just another way for us to be able to provide that data to you in a much more usable format. And that's something that we're working pretty hard to make kind of better as well.
Yeah, that's awesome. I'll be honest with you. I think that's awesome. One of the things I think I like the most is you just letting us know essentially the daily carrying cost of a drawdown is. It can be difficult to figure out whether the juice is worth the squeeze on a deal, because you're like, oh, well, how much am I going to pay in interest? And I don't know. That's not math I can do off the top of my head. I'm sure that some of you guys might be able to. But being able to see what that daily carrying cost is makes it really easy to figure out whether the deal is good enough or not. So, and guys, if you're here watching, if you have a question, I see one, I'm going to go ahead and ask. But if you have questions, ask away. I don't mind asking them, and even if it's a hard question, we'll get an answer. So, Kip is curious, are you able to connect credit card accounts and actually view the transactions that are on another credit card within the dashboard?
Yeah, so you go to settings, financial partners, and you can hook up your other banks and credit cards. Those transactions will be available in the spend views and the cash flow views that I showed you. It's not available in like under account transactions just because you can't pull the data in real time. So you can't like double click into your accounts and see all the transactions, but we'll pull them out, aggregate them, and make them available in the analytics, if that makes sense.
Yeah, makes perfect sense. And I'll see if anybody pops another question in here at all. But any other, I guess, any other features that you think are best in class or are your favorite?
Yeah, I think the part that we're most excited about, I think, is the transparency of how much money you make if you have extra cash and how much it's going to cost you to instantly pull down credit. I feel like our North Star is really transparency and just being kind of very clear about where you're making money and how it goes. People ask us actually, like, so there's no fee, no commitment, we get asked this all the time, like, so how do you guys make money? And it's a fair question. Our answer is we try to take a fair margin on all our products. So we make a little bit of spread on the deposits. We make a little bit of spread on the credit we offer. We make a little bit of spread on the cards. It's just that our margins are much fairer in our mind than a bank's, partly because our cost structure is different. They have lots of people and buildings, all these things, and we don't. And so that's how we're able to kind of do that. But that's kind of like how we're trying to continue to build things.
Nice. And then, sorry, you guys can probably hear the blowers outside now, so I apologize.
If you'd like me to ask the questions, I can. It's up to you.
Yeah, if you want to go ahead and ask that next question, and I've got another one after this.
Okay. So Jay is asking, does this connect to QuickBooks the same way another bank would?
Yeah, exactly. So you go to QuickBooks, enter HighBeam, and import it just like any other bank feed. Most of our customers use QuickBooks.
And I do think it's important to mention, because this is a question that we get, because we've had the opportunity to roll this out kind of internally with some close members. Joining HighBeam does not mean that you have to go close your Chase account. Like, it's perfectly acceptable. I think there's a fallacy. Like, you can have multiple business bank accounts under the same business, under the same EIN. Join HighBeam if you want. There is no fee to join. There is no anything. See if you like it. Play around with it. Apply for line of credit if you feel like you're kind of around that level of revenue. And if it's something that you don't want to stick with, then you don't. But it doesn't mean you have to make that binary. Okay, I have to leave other banks and join HighBeam, and then I have to make that switch back. You can kind of play around with a bunch and figure out what works best for you.
One of the questions I would be remiss if I did not ask is, in a time where there is something like SVB that happened and things like that, where do you guys? How are you guys insured? How is the bank holder protected? Just in case.
It's a great question, and we get it all the time. So the default, so most deposits in the U.S. are insured by the federal government. And so the federal government will insure deposits up to $250,000. And they do this as long as your bank is insured by the FDIC, which is for all our bank partners, it is. You get up to $250K insurance where the federal government says, we will guarantee if anything happens, you'll get this instantly. The SVB case was interesting because they had people with a lot more money than $250K that once it went under, the question was, is the federal government still going to insure it? And they did. But what HighBeam has got is in every account, by default, we have $2.5 million of FDIC insurance. So basically, the federal government insures you up to $2.5 million. And it's a little bit behind the scenes. The way we do this is we actually take your deposits, and if they're over $250K, because we're kind of a software tech layer, we can go and split that up overnight across multiple bank partners and bring it back. It's all completely, you don't have to worry about the mechanics of this, but the value to you is you end up getting the higher FDIC insurance built in, which for larger sellers actually was a big deal because the reason they would go to JP Morgan is because I'm not getting any money out of there, but at least I trust my money's safe, which is a completely fair thing. And now hopefully you don't have to make the same trade-off and you can get kind of a bit of the best of both worlds.
Yeah, absolutely. I want to switch gears just a little bit. I think we've probably. I should say this first. If you guys are interested in learning more, there's a link you guys can use, of course, which is cleartheshelf.com/HighBeam. That link, it's not an affiliate link. I'm not getting a kickback or anything like that. This is just to introduce something I think is good for the community. But it is a way to track things and know that, you're probably an Amazon seller coming to HighBeam, so they can kind of direct you in the right way when you need some service and things like that. But just for full disclosure, and in case the FTC is watching, I am curious as a founder and someone who's really trying to build out something in an industry that has not been disrupted for a long time. What are you reading?
It's a great question. The funny thing is the book I'm reading right now is a book called Horse by, I don't know if you read this one book, but it's like I'm trying to remember who the author is. It wasn't Ann Patchett, but I actually end up reading a lot of fiction, surprisingly.
Mm-hmm.
It's I used to read a lot of sci-fi. Now I've been trying to read a lot of stuff. It kind of gets my mind off of the crazy everyday life. I have 2 kids. It's like everything's so busy, and so I have like 1 hour to go read kind of something that's not related to what I'm working on. That's usually the most. I'm trying to think of like the last pertinent book here that I read that would be of interest, but yeah, that's kind of the most recent one. I've always been a big sci-fi person, unsurprisingly somehow. So like the Culture series with Ian Banks and a few others, but that's kind of like my bread and butter, is basically fiction.
Yeah, no, fiction's great. I mean, there are studies that show that people who read fiction tend to be more creative in their work, and so I wish that I could get more into fiction, but I've got a serious problem with business books.
What's the latest one that you read? I'm just curious.
I'm reading like 7 books in tandem. Most of these are daily readers, but the one I'm trying to dig back into is Buy Back Your Time, because I'm really, really I'm really bad about properly delegating. And Shannon says, Chris, did you say you're one of the? No, I'm not smart enough to be one of the founders of a bank or a financial institution. But I am interested in bringing cool products to Amazon sellers. And then Anna is curious, which I know we've answered before, but I just want to touch on it again. Is all of this based on credit?
So it's a great question. The only part that's based on credit is the line of credit. You can still access the banking, the insight, the yield, all of that stuff is as if, you had a bank account with anyone else. So Bank of America, JP Morgan, you can have a bank account without having credit, and that's how we operate. We just view credit as a feature for larger sellers that we could enable, but it's not based on credit and no fees associated with it.
I do want to touch on that though, because I think we actually buried the lead when we talked about the line of credit a little bit. And I don't know if this is answering her question or I'm just going to answer it for other ones. If you get the line of credit though, it is a non-personal guarantee line of credit, which I think is massively important, because it also means it is not, the way I read this question was, is this going to be tied to my business credit or my personal credit score or some kind of other credit system that exists universally? And to that, the answer is no. HighBeam does their own underwriting based on other factors in your business. And then there is no personal guarantee if you get approved that you have to apply towards the line of credit, which is foundationally vastly different than any other loan system within the Amazon space, especially Amazon lending. All of those are personal guarantees if you're unaware. And essentially that means like if your business goes away and you have a personal guarantee loan, you still owe money on that loan. HighBeam is essentially saying, hey, like, we believe in your business. We believe in you. And we know that you're going to pay this back because your business is going to be successful. And so like they're kind of putting their money where their mouth is in that level, which is rare nowadays.
Yeah, that's awesome. If people want to go learn more, of course, they can hit the link below. Is there any other things that they should check out before they might want to sign up and give you guys a trial run?
Yeah, and just to clarify, Chris, I think the link that we sent was this actual sign-up link that it's a specialty sign-up link that we've provided for Amazon sellers. But if you want to learn more just about the product, it's just highbeam.co. So that'll give you kind of the website with more details. That's kind of more information. And if it's of use, like I try to respond to as many emails as I can. My email is Samir, SAMIR @highbeam.co. I can't promise it'll be the next day, but I try to get back to everyone, within the week. So please feel free to reach out to me directly with any questions as well.
Awesome. Are you using? Oh, let's see here. So someone's curious here. For example, if you had a 7% interest rate on a Goldman Sachs line of credit, would that probably be about the same you would get through HighBeam?
No, it's a great question. So our that 7%, like a Marcus line or something, I think that most banks, there's a few differences. It's kind of what Saul was saying. They're secure, and a lot of times they have personal guarantees, I believe. Our interest rates, we have a flat, transparent APR, but they're typically a little bit higher than what your bank would give you directly. Partly because most people don't qualify for a bank, and partly because we're unsecured and only based on the Amazon line of credit. We're typically around 15% APR, which we believe is kind of the fair, transparent rate. But that's typically where we end up.
Yeah. And then Shannon's curious, do your Amazon deposits need to be direct deposited into your HighBeam account?
Only to activate the line of credit. So not for the banking, but for the line of credit. So to activate the line of credit, you would have to go and tell Amazon to go change the deposit institution to be our account and routing number.
Yeah. And I'm just guessing why Shannon is asking is because sometimes switching your bank account information over to Amazon, it can be a little bit of a pain and, things like that. So,
yeah,
perfect.
We understand, and I wish they made it easier, but we have kind of a bit of a playbook that we help them. But yeah, that is, they don't make it easy for you. That's definitely fair.
Yeah. Oh, perfect. Hey, guys, I really appreciate you hanging out and kind of talking about this. I think I'm very excited to see your guys' journey because I think that I think some disruption needs to happen in the banking space, and I love the Amazon community. I love e-commerce, and so I'm excited that you guys are going in that direction. As that's who you want your customers to be. So I appreciate that. Any parting words before we wrap things up? I know it's well past banker hours, and so I want to get you guys out of here.
I know. I guess unlike other bankers, no golf game to get to for me, I guess. Is the truth. But no. Just thanks for giving us the time, and yeah, I think we're excited about what we can hopefully continue to build. I think that from our perspective, we just think that banks have kind of taken a lot of businesses for granted recently, and it's almost like they're doing you a favor, and we feel that that's kind of become ingrained somehow. And it was part of the thing that irked me, was trying to build something where we feel like we want to earn your trust and earn the right for you to bank with us. And it's interesting to us how often people view that as kind of, oh, that's innovative, and I'm like, well, it shouldn't be, but that's kind of why we see it as our opportunity. And so yeah, that's it. Thanks for giving us the chance to kind of talk about what we're doing.
Yeah, awesome. All right, guys, that's going to be it for today. The replay will be up if you guys need to watch the replay. You're more than welcome to reach out to Samir. That's at samir@highbeam.co. You can check out the link below, or just go to highbeam.co if you want to learn a little bit more. I think you guys are going to, I think I'm going to have these guys back on, in a while. We'll chat a little bit more, because I do think that sellers need better tools, better banking, and things like that. So thanks so much for tuning in, and talk to you guys soon. Have a great one.
Thanks, guys.